Okay, so, you sent in some really interesting stuff this time.
Yeah.
Excerpts from the Essays of Warren Buffett, Lessons for Corporate America
Mhm.
by Lawrence Cunningham.
Mhm.
Now, when most people think Buffett, um, their mind goes right to investing, right?
Oh, absolutely. Yeah.
But what really kind of struck me going through all this is how much it's actually about so much more than that.
Right.
Running a solid business, um, management, ethical choices, that kind of
I
thing.
think that's what's so great about it.
Yeah, it's not just like a stock picking guide. It really is about how to build a, business that lasts.
Exactly. It's about the whole picture.
Yeah,
And so our mission today is to really pull out those core lessons, those enduring pieces of wisdom from these essays.
I like that. Yeah, the enduring wisdom.
Yeah, and maybe uncover a few surprises along the way as well.
Yeah, I think there are definitely a few in there.
Yeah.
Um, so think of this as kind of getting that distilled essence of Buffett's thinking. Not just about, okay, where do I put my money?
Yeah.
But about the fundamentals of building and leading, really successful enterprises.
He's more than just a stock picker. He's a keen observer of what makes businesses thrive.
Right. And sometimes stumble too.
Yeah, and sometimes stumble, of course.
So let's start with his fundamental take on investment.
Okay.
Um, where does his thinking really begin when he's looking at a potential, company or whatever?
What's fascinating here is how Buffett defines investing.
Yeah.
It's not about, the daily ticker tape drama.
Right.
For him, investing is about owning a piece of a business.
Really becoming a part owner.
Exactly. And that shift in perspective,
Yeah.
that changes everything.
It's not just numbers on a screen.
No, it's about the long-term health and prospects of that company.
It's like the difference between renting a car and buying one.
Yeah,
When you own it, you care a whole lot more about its upkeep and its long-term value.
absolutely. And I think that's a great analogy.
And from that owner's mindset,
Yeah.
all of his core investment principles flow from that.
Right.
First and foremost, value investing.
Okay.
So for someone maybe just starting to explore this, what is the essence of buying shares for less than their intrinsic value?
Okay. So intrinsic value in Buffett's view, that is the true underlying worth of a business.
Mm-hmm.
Okay. Regardless of its current market price.
Regardless of what the ticker says.
Exactly. I think of it like this. Okay.
Okay.
You have a dish, right? And the ingredients are fantastic and the chef is phenomenal.
Right.
Regardless of the day's special price,
Right.
that dish is worth a certain amount because of the quality of those ingredients and the chef's skill.
Right. The underlying quality.
Exactly.
Yeah.
It's about the underlying worth of that business,
Yeah.
what it's really capable of earning and generating over time.
So he's not looking at, the hype. He's looking at, okay, what is this business really worth?
Exactly.
And then trying to find situations where the market is offering a bargain.
That's exactly it.
Yeah. Compared to his assessment of that worth.
You got it.
And that leads us to the margin of safety, which sounds like a crucial built-in protection.
It is absolutely crucial.
Okay.
The margin of safety is that gap, that discount you insist on
Mm-hmm.
between the intrinsic value and the price you pay.
I see.
So it's not just knowing the market price, it's understanding the real value
Right.
and leaving yourself some breathing room for error.
Right, because we're not perfect.
We are not perfect. And so
Yeah.
you need that insurance against miscalculations or unexpected things that may happen in the future.
That makes a lot of sense.
Yeah.
It's like a builder over-engineering a bridge.
Exactly.
You want that extra strength in case of, unexpected stress or whatever.
Absolutely.
And all of this aligns with his famously long-term view, right?
Mhm.
He's not trying to time the market next week.
No,
He's thinking decades down the line.
exactly. Buffett has extraordinary patience
Yeah.
and largely ignores the short-term ups and downs of the market.
Which is hard,
It is very hard.
especially in today's, world.
Right. But he's focused on the enduring strength and profitability of the businesses that he invests in.
It's fundamentals.
Exactly. And that allows him to benefit from the power of compounding over time
Right.
and ride through any temporary storms.
And we see this in the essays with examples like Coca-Cola and American Express.
Right.
These weren't quick flips. These were long-term commitments based on his belief in their, lasting power.
Yeah. What's so interesting about those examples is that they highlight his belief in businesses with a durable competitive advantage,
Right.
which leads us perfectly to how he evaluates a business in the first place.
Yeah.
It's not just about numbers on a spreadsheet.
Already.
It's about the fundamental qualities of that enterprise.
Right. So when Buffett is considering putting money into a business, what are the real indicators that kind of catch his eye?
Okay, so several things stand out.
Okay.
First, a strong brand, or as he calls it, a competitive advantage, or an economic moat.
Okay, the moat?
Yes. Imagine a castle, right? The moat is that deep, wide water barrier that keeps invaders, or in this case, competitors, away.
Right.
For Buffett, a strong brand or unique technology acts as that powerful defense
I see.
for a business ensuring long-term profitability.
It's that, unique selling proposition, that thing that makes customers choose them over everybody else.
Exactly.
Yeah, and it's hard for competitors to just come in and, muscle in.
Right. It makes it very difficult.
So what else is he looking for?
He's also looking for skilled and critically trustworthy management.
Okay.
Buffett places immense value on integrity and competence at the leadership level.
That makes sense.
Yeah.
Because you can have the most brilliant business plan in the world.
Yes.
But if the leadership is poor
Right.
or, even worse, unethical, it can completely derail the whole thing.
Absolutely.
Okay, so we got the moat, we got the good management. What else?
Next, he looks for a consistent track record of earnings.
Okay.
Buffett wants to see a history of stable and growing profits, right? This indicates a mature and reliable business.
Yeah, you're not looking for the, flash in the pan kind of thing.
No, he's cautious of companies with erratic or unpredictable financial performance.
He's looking for a steady hand on the tiller, not a roller coaster ride.
Exactly.
And finally, he really emphasizes a transparent and simple business model.
Yes.
Why is that so important to him?
Well, as he says in the text,
Uh-huh.
it is better to invest in simple, understandable businesses than in complex ones.
Keep it simple, stupid, right?
Right. He wants to be able to grasp how a company generates its profits.
Right.
If it's too convoluted or opaque,
Yeah.
it becomes much harder to assess its risks and its future prospects.
Yeah. You can't really get your head around it.
Right. He sticks to what he knows and what he can analyze with confidence.
So it's almost like if you can't explain it simply, you don't understand it well enough.
That's a great way to put it.
So now let's move on to management and leadership.
Okay.
Buffett has some strong opinions on this as well. What is that core idea when it comes to running a company well?
I think the central idea is that good management acts as a custodian of the shareholders' capital.
Good.
Their primary duty is to make decisions that will build long-term value for those owners.
They're stewards
Yes.
of other people's money.
Exactly.
And part of that is straightforward communication with the shareholders, right?
Yes, absolutely.
No, trying to hide the truth or sugarcoat things.
Transparency and candor are paramount.
Yeah, just be honest.
Be honest.
He also talks about managers adopting an owner's mindset.
Yes.
So what does that actually look like in day-to-day operations?
It means approaching decisions as if it were their own personal wealth at stake. It cultivates a sense of responsibility, a focus on sustainable growth, and a reluctance to take unnecessary risks.
Right. They're not just punching a clock. They're really thinking about it like it's their own money.
Exactly. They're acting as stewards of the shareholders' investments.
And Buffett's own leadership style seems to reflect this.
Right.
He famously gives his CEOs a lot of autonomy.
Yes, he does.
He doesn't micromanage.
No, he grants considerable independence to the leaders of Berkshire Hathaway's many businesses.
Yeah.
But this trust hinges on them demonstrating integrity and competence.
Right. It's not just a blank check.
No, he empowers them to run their operations effectively, but he holds them accountable for the results.
Right. So there's a balance there.
There is definitely a balance.
Okay, so now let's say a company is generating profits. A crucial decision arises what to do with that capital.
That's right. That brings us to capital allocation.
Yeah. How do we use the money we're making?
Exactly. And Buffett argues that how management decides to deploy those profits, that's one of the most pivotal decisions they make.
Makes sense.
Right? It can significantly influence the long-term returns that shareholders receive.
So what are the main options on the table?
Okay, so you have a few choices.
Okay.
You can reinvest in the current business.
Okay.
You can acquire other companies.
Okay.
Or you can repurchase shares.
Okay, so reinvesting, that could mean expanding operations, maybe developing new products or services, that kind of thing.
Right. Or boosting efficiency.
Right.
Making the current business run better.
Okay, and acquisitions, that's buying other companies.
Exactly. Buying other businesses that can complement the existing ones or open up new markets.
Okay, and share buybacks, that essentially reduces the number of outstanding shares, which potentially increases the earnings per share and bumps up the stock price.
Exactly.
So what has been Buffett's preferred way to use the capital?
Buffett typically favors reinvesting in his existing high-performing businesses,
Makes sense.
especially if those businesses offer attractive opportunities for growth.
Right. If you've got a good thing going, keep feeding it.
Exactly. He also actively seeks out acquisitions of new businesses, but they have to meet his criteria.
Right. It's not just any company.
No, it has to have strong fundamentals,
Right.
capable leadership, and be available at a sensible price.
Right. He's not going to overpay.
Absolutely not. He's very disciplined in that regard.
In share buybacks, he's a little more discerning. With those, it seems like it's not just an automatic response to having extra cash.
That's right. He generally only advocates for buybacks when he believes that the company's stock is significantly undervalued.
Okay.
So the buyback itself becomes an attractive investment.
It's like buying, dollar bills for 50 cents.
Exactly.
Okay, so let's shift gears a little bit
Okay.
and talk about Buffett's view on the stock market itself.
Okay.
His Mr. Market analogy is something that really sticks with people.
Yeah, that's a famous one.
Can you unpack that for us a little bit?
Mr. Market is a metaphor for the stock market.
Okay.
He's this sometimes irrational business partner who offers to buy or sell his stake every single day.
Every day.
Every single day.
Wow.
The key insight here is that Mr. Market's mood swings don't actually dictate the true value of the businesses.
So it's like he's got, bipolar disorder or something, and some days he's manic and other days he's depressed.
And he lets his emotions get the better of him.
Yeah.
But those emotions don't reflect the reality of the situation.
Right. And so the lesson there is that investors shouldn't get swept up in the market's emotional roller coaster.
That's a great way to put it.
Rely on your own analysis of a company's worth and not just get, caught up in the crowd's enthusiasm or panic.
Stay grounded in your own assessment of intrinsic value.
And the essays also touch on his general wariness of IPOs, initial public offerings.
Yes.
Why is he typically so cautious about those?
Well, he observes that IPOs often generate a lot of hype and can become overpriced.
Right. Everybody wants to get in on the, the ground floor.
Exactly. And by the time a company goes public, much of the potential upside has already been realized by early investors.
Right.
He prefers to invest in established companies with a proven track record at a more reasonable price.
That makes sense because with a brand new company with a limited track record, it's tougher to really assess that intrinsic value.
It really is. It's much more speculative.
Okay, so let's move on to corporate governance.
Okay.
What are Buffett's key principles for how companies should be run at that, board level?
He believes that corporate board members have a fundamental responsibility to represent the interests of the shareholders.
Mm-hmm.
They should be independent thinkers and not just rubber stamp whatever management proposes.
So he's really advocating for boards that are actively involved, really providing genuine oversight, not just, kind of figureheads in the boardroom.
Absolutely. He wants them to think for themselves, ask challenging questions, and ensure that management is operating ethically and with the shareholders' best interests in mind.
So thinking long-term and being ethical, that really kind of ties into this, huge emphasis that he puts on integrity and transparency.
Absolutely.
Doesn't it?
One of his most famous quotes really sums this up.
Okay.
It takes 20 years to build a reputation and 5 minutes to ruin it.
Yeah.
That highlights just how important trust and credibility are to a business.
Yeah, and how fragile that trust can be.
Exactly. One wrong move can damage a reputation that took decades to build.
It can all go up in smoke so quickly.
It really can. And the consequences are far-reaching.
Yeah.
It impacts not just the company's financial performance, but also its long-term sustainability and its standing with the public.
Right. It's really hard to come back from that kind of thing.
It is.
So we see these principles that we've been talking about, put into practice through Berkshire Hathaway.
Mm-hmm.
Can you give us a little bit of an overview of what the Berkshire model is?
Berkshire Hathaway is structured as an investment holding company.
Okay.
Its core strategy is to acquire a diverse range of businesses in all kinds of different sectors.
Right. Not putting all your eggs in one basket.
Exactly. Diversification is key. And one thing that Buffett typically does is he allows those acquired companies to operate pretty autonomously.
Okay.
As long as they continue to perform well and have strong leadership.
So it's not like he's coming in and, imposing his will and his culture on every single company that he buys.
No, it's about identifying well-run businesses with good management.
Right.
And letting them do what they do best.
And trusting that they're going to continue to do it.
Exactly. The focus then is on generating long-term cash flow from these diverse operations.
Okay.
Which provides capital for further investments and acquisitions.
Right.
And it creates this wonderful cycle of compounding growth.
So stepping back and looking at these essays as a whole, what are some of those key personal lessons that really stand out?
Okay, well, several important themes emerge.
Okay.
One of the most consistent is the importance of patience.
Mm-hmm.
Buffett's long-term perspective underscores the power of waiting for the right opportunities.
Right. Not just jumping at the first thing that comes along.
Exactly, and allowing time for investments and businesses to truly mature.
Right. It's a powerful antidote to the, short-termism that we see so much these days.
Absolutely.
What else kind of hits you when you read through these essays?
I think another crucial lesson is the importance of having conviction in your own analysis. Do your homework, truly understand a business,
Yeah.
and then stick to your judgment even if it goes against the grain.
Even if everybody else thinks you're crazy.
Exactly. Trust your own assessment.
Right. Because sometimes the crowd is wrong.
Sometimes the crowd is wrong.
And that independent thinking, I think, is valuable, in any field, not just in finance.
Absolutely. Anytime you're making important decisions,
Right.
that independent thinking is crucial.
Okay.
So, what else?
Another key takeaway is that you have to prioritize sound decision-making
Okay.
over simply chasing quick profits.
Yeah. It's not about the quick buck.
It's not about the quick buck. It's about doing things the right way.
Right. Building something that's going to last.
Exactly. Focus on the process. Understand the fundamentals, the potential risks,
Right.
and the financial rewards will often follow.
Right. You got to have that strong foundation.
You do.
Okay. So, final takeaway.
Recognizing the power of compound interest and time.
Okay.
Buffett cites this constantly as a core principle for building wealth.
Consistent, even modest returns over a long period can yield extraordinary results.
It's the snowball effect.
Exactly, like a snowball rolling down a hill.
It starts small, but then it just gets bigger and bigger.
And bigger.
Yeah.
It's the magic of compounding.
So this deep dive into Buffett's essays, I think, has been really illuminating.
I agree.
There's so much wisdom here that goes way beyond just, the world of finance.
Right. It's applicable to so many things.
Entrepreneurship, ethical leadership, really anyone who's, trying to build something of lasting value.
What I find so fascinating is how all of these principles are interconnected.
Yeah.
The emphasis on the long term that influences his investment decisions, how he evaluates businesses, even his views on corporate governance.
Right.
It's really a holistic philosophy.
Yeah. So what does this all mean for you, the listener?
Well, I think it's a reminder that building something truly valuable, whether it's your investments, your career, your own business, your life.
Yeah. It boils down to consistently applying sound principles, maintaining that long-term focus, and always upholding your integrity.
Right. It's about the long game.
The long game.
And it's about doing things the right way.
Yeah. So to wrap things up,
Okay.
here's a question for all of you listening.
Mm-hmm.
Buffett really hammers home this idea of long-term thinking, right?
He does.
And how fragile a reputation can be.
Yeah.
So think about this.
Okay.
What are some seemingly small decisions that you're facing right now that could have huge consequences down the line?
That's a great question.
Yeah, it's all about those little choices that we make every day
It is.
that ultimately shape our future.
Exactly. We hope this has given you a lot to think about.
Yeah, definitely something to chew on.
Until next time.
See you later.